What's up, guys? Nico Wrench Capital. Happy Monday. Let's get at it here today. So, again, for those of you guys who are a little bit newer who didn't catch Friday, every morning, 5 days a week, as long as the market's open, 8:15 a.m. Central Time, I will be live for 2+ hours. Now, we do have a little bit of news here this morning at 8:45 Central, 15 minutes after the market opens. We get the U.S. S&P Services PMI flash. The forecast for that is 51, so we'll see what that comes in at. That's around the time that I like to start trading anyway, so we'll see what we get. And we also get at the exact same time U.S. S&P Manufacturing PMI flash. The forecast for that is 51.8. All right, so again, services, forecast 51. Manufacturing, forecast is 51.8, and those hit 15 minutes after market open, so that's 8:45 a.m. Central. So let's see what we get there. I think what I'm going to do is probably hold off until we get that news, and that news is not going to cause like minutes and minutes of volatility, so we'll wait a couple of minutes after that, and then I think we'll be all set. All right, what's up, guys? Good morning. We are 6.5 minutes out from open. Let's see what we get. Kind of a trend here. Look at this. This is the 5-minute. This is what we're getting all morning. Basically, since midnight last night, we've had this all night. I'm not convinced we're going to keep that clean of a trend off the open, but that'd be nice. You catch a trend like that, it can make your month. So, again, as you guys pour in here, 15 minutes after the open, we got some news, and then we're pretty much set to go. Today I'm going to trade probably the same. I think I'm going to keep it the same as what we did on Friday. I think I'm going to trade probably these 6 Apex PA accounts, and we'll trade that same Take Profit Pro account and see what we can do here today. And then maybe what I'm thinking here for the stream is that maybe I'll start tossing in some 300K PA Apex accounts and see what we can do in the coming days, if not weeks. Those 300K accounts with Apex are fantastic. I mean, if you can pass them. So the trade-off is they run a lot of deals where they're actually the same price, if not cheaper. Like right now, the 250 and 300K accounts are actually a little cheaper because the lifetime activation fee is 85, whereas normally that's the monthly. And what's nice about that is once you pass, you can trade. You have room to trade like a mini, at least in my opinion, with the drawdown. Maybe like 1 mini. But they're more difficult to pass. With the 300K, you have to hit a 20K profit target with a 7,500 trailing drawdown, which is kind of crazy, but being that I'm more aggressive on the evals anyway, you can pass them just fine. If not first try with, a couple of tries, and I think they're inexpensive enough to be a part of the business model. Again, I think with prop, it's just a business model. It's expenses, and then can you generate more revenue than what it's costing you to keep popping? So, all right, guys, how you guys doing? How do you guys feel about today? I mean, you're looking at this 5-minute chart on the top left of your screen. Clean trend. Again, I'm not convinced. I really don't think this news here this morning, again, the services PMI and the manufacturing PMI, I don't think that's going to completely change the entire outlook on the day, but I'm not convinced, even that news aside, that this clean trend is just going to maintain. That's just very rare to see that when volume really starts pouring in. Matt says he sees a sell-off at open. Yeah, it wouldn't surprise me. I'm not going to take a trade off of that idea, but it wouldn't surprise me at all. Wait for it to come to us, and we'll trade it as it comes. Let the chips fall as they may. Hope you guys had a good weekend. You guys rested up. I was telling people in the free Discord every weekend, rest up. We have work to do Monday, so here we are. Yeah, these really clean pre-market trends always make me a little nervous. I just don't see that maintaining as far as the cleanliness of the move, but we'll see. And we'll see what that news does to the market. Again, oftentimes the services and manufacturing PMI, especially at this point in the cycle, guys, it's been so long we've been talking about this. Usually the volatility off of this is short-lived. Okay? But would I say, to gamble on it with like some funded accounts? I certainly will not be. So usually I'll start trading around 8:40 Central, 8:45, at least during the market open. And I think probably today I'm going to hold off till maybe 8:47 or so at the earliest. Just see what we can do. Let a 2-minute bar pass, or I guess a 1.5 2-minute bars pass after the news hits, and then we'll see what we can do. All right, 2 minutes out. 2 minutes and 15 seconds out. What do you guys think? I don't know, man. Do we get a dump off the open? Lee says, good morning, everyone from the East Coast. Man, even the West Coast, you guys better be here. Market's about to open. You better not still be in bed. I know some of you guys out in California. I trade momentum starting at 6 o'clock Central Time every morning. And on my audio squawk, I have people in California logging in at 4 a.m. You want to live this life, man. It's an early day. Every day. Yeah, there you go. We got some West Coast. All right, 90 seconds out. Slow day? No, we'll see what we get. Oh, by the way, you guys remember on Friday's stream, Apex was going to, at least as far as the schedule they had at the time of that stream, they were going to, I suppose you'd say, end their 80% off sale. They extended it. So it's still 80% off at Apex, and you can pass in 1 day. Use code BIG over there. That goes for all of the accounts. And then they are running a special on the 250 and 300K accounts, where the lifetime activation is the same price as the monthly. So with like a 300K account, you can currently get the eval for like 33 bucks or something. And then the lifetime activation fee, if you pass the 300K and the 250K, I suppose, is 85 bucks, which is crazy. That's cheaper. I think, yeah, that's cheaper than like the 50K accounts. But the trade-off is they're harder to pass the evals. Once you get through the evals, now you have this account with a $7,500 trailing drawdown, which is a lot more than the 2,500, especially when we're talking about trading minis. Trading minis in the 50K accounts, I know everyone does it. Doesn't mean we should, right? I think it's a little big, especially, there's the bell, especially if you're, taking on more than like 10, 20 points in the stops. If you're trading 40-point stops in a 50K with 1 mini plus, I don't know, man. That's really aggressive. But it can be done. But you're gonna blow through accounts probably at a quicker rate than everyone else. Well, there's the pullback on the open. Broke that 20 EMA on that 5 minute. Let's see if we hold that move. Again, I'm going to give this market today maybe 17 minutes or so after the open because we have that news. So we'll see what we get here. Would you just add a multiplier on the copy trader for the smaller to larger accounts? Well, so what I do is you can cross order, okay? Now, a lot of people, I asked about this in some of the videos a couple months ago, maybe a month ago, and a lot of people were saying that they had issues trying to cross order between NQ and MNQ, which is something that we should talk about with trade and prop. I have found it to be okay, even with scalping, but especially with more like day trading, longer term scalps. When I say a longer term scalp, I mean longer than a couple of minutes on average. But I mean, what I would do is trade the leader in whatever you want, probably the NQ, if you're trading one of the bigger accounts. And then you can cross order to MNQ in the smaller accounts and just ratio it however you need. So if you're trading like one NQ and you want to trade, let's say 3 or 4 micros, then you would ratio 3 or 4 as the ratio, but cross order it to MNQ. That's what I've done. I haven't had issues with the cross sorting. Man, we're getting a dump off here. I always think it's funny how us traders are always like, man, it's dumping it, market crashing, and it's down like 0.25%. We're zoomed in. Okay, for those of you guys just joining us again, we have at 8:45 Central. So we're about 12 minutes out. Services PMI forecast is 51. Manufacturing PMI forecast 51.8. We'll see what we get. That volatility should be short-lived. Couple of minutes tops. So we'll let that clear. Now, if you look at that daily chart, what I'm kind of looking at here is you look at the past 5 trading days. And again, we talked about this a little bit on Friday, but we're definitely not seeing these massive, massive trend days. What we've been seeing a lot more of is big range days with like trends within the range. So the range is wide enough where we're getting like 2 to 3, maybe 4 trends throughout the day, just switching direction. So I can't really call it a trend day. I can't really call it a range day. It's a little bit of a mix, and you have to pick up on that. It's a little more rare that we see that, and it's tough to get that context after the fact when you're looking at the daily. Like down here, this just looks like a bunch of range-bound trading. That really isn't what it has been, so markets have inertia, right? So I'm kind of watching to see if we end up potentially getting something like that. Otherwise, if we end up maintaining what we saw pre-market, we could end up with a trend day, and then it's time to adjust the trading a little bit, maybe widen things out. The average trade duration increases a little bit, and that's fine. Hey, Ken, I do trade the 1 minute on momentum stocks pre-market. I just prefer the 2 minute on futures. Gives you a little bit more time to make decisions. So I watch the 2, the 5, and the daily on futures mostly. I think if you watch too many charts, you get paralysis. But if you watch one chart, you don't get enough context. I think there's a balance, just like everything here. And then for momentum, it's the same, the daily and the 5 minute, but I just swap out the 2 for the 1. Because I think it's they're typically more volatile, moving a little quicker. I think it's helpful. The 1 is better. On futures, I find the 1 minute, while I don't hate it, and I definitely have used it many times, the 1 minute is a little bit too quick of information. I like to see things develop a little bit better. A lot of people would say the 2 minutes too quick. I like the 2 minute. Yeah, man, trying to trade this chop off the open is so tough. This blows people out all the time, every day. This back and forth. I prefer a little bit more decisiveness. If you guys recall Friday's stream, for 15, 20 minutes off the open, we just got a collapsing little range of just total no man's land. Kind of like what we're seeing here, but today's a little bit more volatile. That's in that breakout at the bottom there. That was an accident. So you get the 5 here. We're testing these bottom wicks pre-market. These here. Now, again, guys, pre-market, you have to remember, like, volume's lower, okay? So the sample size on these bottoms means slightly less. It's never black and white. It's always a little bit of contextual. It's a little bit of, it's a lot, actually, of gray area. And there are a lot of factors that come together for you to make a decision, okay? So those pre-market bottoms, at least the way I look at it, are going to mean a little bit less than a high volume bottom off the open. As far as breaking downside or looking at treating it as support, I usually look for breaks downside. That is usually going to be continuation scalping with stop limit orders, entries, right? Stop entries. But the sample size pre-market, the volume is going to be lower, right? So we have to consider that. But you start forming these bottoms here during the day, and all of a sudden it means a little bit more. But I still consider the pre-market stuff just a little bit less percentage-wise as far as the weighting. And this isn't like I'm doing it on with pen and paper all day. It's just kind of discretionary decision-making in your head with all the factors combined. And I don't want to make it sound overcomplicated, but that kind of is how it ends up looking long-term. Just screen time. That's it. Just screen time. Sit and watch some charts and you'll get better. Well, we're trying to establish this range here. Again, we got 8 minutes out from news. See what we get. Those are PMI numbers. I always wonder who's trading this open. I know it's a lot of institutions, a lot of funds. Just, you know, you have to understand that when you're inside of a range, off the open, off news, a lot of times it's going to be a lot of funds, institutions making longer term plays, right? And that's not really contextual to a trader because they're not even thinking about today. They're just making a buy or a sell for their, you know, month and a half out strategy. So it's really hard to find edge in that environment. I think you have to be able to recognize that. Right now, I think we're in an environment like that. Nico, a YouTube trader once said if you're trading all day, you're doing something wrong. That stuck with me as bad advice. I think it depends on your style. If mentally you start to deteriorate after 11 a.m., then no, I think that's good advice. But I think a lot of people say that and don't understand the numbers. So the reality here is if you have a statistical edge in a setup that you trade and you can prove that with data to yourself, then as long as you have that every hour of the day, which you should also be tracking hour of the day performance, then if you want to and you're mentally capable of doing so, then you should trade all day. If your only goal is to make more money. Now, there's a lot of that's a nuanced question, right? Because, or it's a nuanced answer to I think an oversimplified statement that it's bad advice to trade all day. The reality is if your goal is to make as much money as possible and you have edge all day and mentally you're okay, then you should trade all day because it equals more money. It's like if you're a card counter, should you play longer? The answer is yes. Now, again, there's a quality of life question here. Do you want to trade 6.5 hours a day? I think a lot of people would say no, but I think that in the early years, well, in the early months especially, I think it definitely helps. Screen time. All right, 5 minutes out from this news, 7 minutes out from kind of beginning to look at trades here. The range is a little bit wider than it was on Friday at this time, I believe, if I remember correctly. Getting a lot of volatility here. So probably going to look at widening things out. Maybe not compared to Friday. I think Friday we ran a 40-40 risk reward as far as points. Probably look at doing the same here if this volatility maintains. Yeah, guys, if you find that you're taxed mentally, emotionally, psychologically at a certain time of the day, and I know a lot of you are probably not tracking your data, but if you were, you would probably see that at that time of the day when you start to feel that way, that your performance goes way downhill. Worth noting. Just because you have edge at 9 a.m. or 10 a.m. doesn't mean that you will at 3 p.m. Rejected off the intraday high here. Yeah, this is no man's land. We gotta let volatility calm. We gotta let this news come in and hit, finish up. Then we can start doing some trading here. Later on in the day, guys, we do have Fed's Bostic speaking. That's at 12:45 Central. At 1 o'clock, Trump, Governor of Louisiana, speaking. Fed's bar at 2:10 Central. The Fed talks, the board members, they used to cause more volatility a couple of years ago, so you have to pay attention to that. Today, we're not really hearing anything new out of them. So, like Bostic bar speaking, it's not something I pay super close attention to these days. But a couple of years ago, it was a big deal. All right, we're about 2 minutes out of the news. You know, I'm actually really curious about what accounts do you guys like to trade the best? Because I know that everybody on YouTube trades the 50s, and I like the 50Ks. They're good. I mean, they're easy to pass. Usually it's a first try, and if you for some reason fail the first try, it's kind of like a second try kind of thing. But the drawdown, man, the $2,500 drawdown, trading a mini is just a really tall order in those accounts. I can't justify it. I mean, you lose 2 or 3 trades in a row with a you know, giving a trade some room, and it's game over for those accounts. And again, I think everybody is so against blowing accounts because they cost money. But listen, it's a business model, and I think you're going to have expenses. You know, again, we talked about this on Friday, I think, but this is a bell curve. Okay, for anyone new. I think peak profitability trading prop. This is very different from personal accounts, okay? So you have to understand the context. Peak profitability with prop lives somewhere in the middle of the bell curve, right? And I think on this side is being overly aggressive, and on this side is being overly conservative. Whereas both cases, you never really get to the point of taking any money back out. The rules are the way that they are for a reason. You have some smart people running math, trying to figure out how can we make, you know, as a prop firm, how can we make $100 million bucks? But in order to do that, they have to have winners. Otherwise, there's no longer the magic, right? There's no carrot for the prop firm to dangle. So they need winners, but they also need a lot of losers. So they make the rules a certain way, and you have to have a business model, I think, to make money in the prop industry. Meaning you're willing to have a certain amount of expenses with a goal of revenue generation. I think it's unrealistic and probably not the best approach at all to get accounts and be like, I'm going to hold on to these babies for 15 years. I don't know. Not the way that I want to approach it, at least. But you guys know, right? I'm conservative with my size. Probably way more than most other traders, especially online trading prop. So don't take that out of context. 50K accounts. 25K accounts, 50K accounts, 50K accounts. Yeah. Yeah, I like the 300K accounts. Okay, there's the news. What do we get? No update on my wire yet. It's overloaded. It's not loading. I'm just looking at financial juice right now. Yeah, you guys see that? A lot of indecisive nature of this news, so that's expected on the PMI stuff. I'll let you guys know when it came in at when financial juice actually loads here. Okay, services PMI came in at 54.3. Okay, yeah, services PMI 54.3, forecast was 51. And manufacturing PMI 49.8, forecast was 51.7. So that's kind of a mixed bag. Okay, so we'll let that volatility kind of calm, and then we'll start looking if we can see some kind of range developing or some kind of trend developing with breakouts. Either one, don't care. Yeah, so the futures desk is a great firm. They you know what I really like about the futures desk is their portal. With every other prop that I've ever seen, you have to export, and you guys know I'm huge on data, right? So you have to export. First of all, here we are testing the high. See if we can start getting breakouts and maybe a return to this uptrend. You have to export your data, and with prop, I don't know if you guys have noticed, but exporting the prop data, it's kind of sloppy. It's not as clean as like exporting straight up stock data from like a platform like Lightspeed, it comes in a little sloppier into, usually in a lot of the props, into the like trader view is what I like. But with the futures desk, it's all live. It updates live. You don't have to even refresh the page. They have all the data you need right in the portal, which is great. But it takes longer to pass, just because the way that they have the rules laid out. But then they put you right in a live account. So, I mean, there's trade-offs. I mean, my opinion has always been like, well, I don't really know if we need to pick a favorite. I think just probably all of them is the best decision. Or at least rotating between. Yeah, with Rhythmic versus Tradeovate, right? I like Rhythmic. I don't know, Rhythmic seems to me to be the more, at least right now, it seems to be the more professional, like quicker, maybe better provider. But Tradeovate also, I mean, like with take profit, it works very well, though sometimes there's a little bit more of a delay I've noticed with Tradeovate, but for some reason I also seem to have less like ghost order issues, but I think the ghost order problem or the ghost position problem is a straight up ninja trader problem. At least that's what I've been told by developers, so I guess I can't really blame Rhythmic because I don't know. Alright, so the news volatility seems to have cleared, so let's start waiting for something to develop here, and when something does, we can start taking some trades, see what we can get. Yeah, so guys, with Apex, you know, again, it's single day pass, so I see a question about the futures desk. With Apex, it is single day pass. You can pass in one day and it's 80% off. With Futures Desk, something that they do is they have that daily fixed goal. So if you have a red day, and they actually changed this, I talked to them about this. Previously, if you had a red day, let's say $700 per account or whatever, you can still only make your your profit goal total divided by the amount of days you chose when you signed up for the account. You could only make that. So let's say it's like $500. So it takes longer to claw back from a red day, which I think is maybe a little backwards because a lot of traders that are terrified to have red days, which are part of the game. If you're coming into this thinking you're never going to have a red day, you have something big coming your way, you're going to have, I mean, it's part of the game, right? It's just part of the business model. But they recently changed that to, I think now, I don't want to explain this the wrong way, but I think now you can make 150% your goal after a red day or something like that. I'll have to double check that. But they made it more favorable, all in all. However, again, yeah, since they take you direct to live, you have to understand the business models of different props. They take you direct to a live account after you pass, which is a bigger commitment on their end, right? So, I mean, and you get daily payouts, things like that. Your orders actually go to the exchange, whereas they don't with an Apex PA account. But, I mean, does it really matter for you? I suppose not too much if you're still getting payouts. But they want to make sure that you can trade, you know, more than a single day pass, so that's why it takes longer with like a firm like the Futures Desk. Okay, so we're returning to this uptrend. I really want to see more of a channel form. When we get these kind of shrinking bull bars, it's a really tall order to start getting long here. We're not getting growing bull bars, at least not yet, which is where I might overlook a range, right? You know, here we're just kind of getting a little bit of shrinking bull bars, which is tough. All right, what I'm really looking at here is, you know what this is eerily reminiscent of? Kind of Friday, right? We started getting this slow developing, grindy upside range. However, this is slightly less of a range. If we can start seeing kind of a range development through here, that'll absolutely start looking to limit order trade the bottom side of that range. Grind upside here though so far. Yeah, that daily chart behind me starting to look a lot like a big old bottom down just above 19,000. You guys think we're gonna hold that? See, this is the point, kind of like today, but really this week. This is kind of always the point where we start questioning, okay, is the bottom in? Is this gonna be a short-lived bounce and then we start fading hard again? Or do we continue to grind upside through here? And again, as the grind continues upside, the probability, if you're somebody who trades longer term futures, which I doubt many of you are, but let's say you own ETFs or something of that sort, that grind upside, as you get higher and higher, the probability increases, but then the risk also increases. Okay, you want high probability, risk goes up. You want high reward potential with little risk, guess what? Math, probability goes down. Just the reality of the market. It's always a range. Or I should say a spectrum. It's always changing. There are very few opportunities that exist that are very, very high probability, yet very, very low risk, and everyone's looking for it. And it might happen a few times a year. I think it's better to just find a little bit of edge and then scale the sample size out. At least if you want to be a day trader. If you're running a hedge fund, maybe it's a little different, but... Alright, looks like we might be getting a little bit of a range forming here. Just a couple of touch points though so far. We really don't have my 3 touch points. So I'm kind of looking for that third touch point. I'm not a huge fan of 3 touch points in 3 2-minute bars. But, 4 or 5 2-minute bars with 3+ touch points, well, really 3. Then you get more bars with more touch points. Comes more favorable to me, at least in my eyes. You get these slow, grindy upward bars. When we start seeing something like this, what I always start thinking, unless again, we start seeing that channel continue to respect. I just know that you start getting these wicks, you start getting bars like this. A lot of traders right now are thinking, okay, I'm gonna start betting on the reversal here. Bulls start getting a little bit more hesitant because the buying pressure is clearly diminishing a little bit, at least right now. I'm talking moment to moment now, candle to candle. By the way, listen, this gap. Now, this is just showing the New York session, okay? But this overnight gap, or I guess over the weekend gap, a lot of traders, especially when they're newer, because there's a lot of content out there that says, the gap, trade the gap always gets filled. That's not true at all. The gap usually gets filled long term, but there is absolutely nothing at all that says the gap has to get filled today. That's a complete fallacy. I think it's just an easy piece of content to make, unfortunately. but that's not at all. I mean, the probability goes up the longer the time in between, right? Or the longer the time that goes on after the gap. But like day to day, that's a bizarre way to trade. All right, here we are, getting a little bit of a growing bull bar. Something that you guys might not notice here, some of you though, I'm sure you are. Look at the range in the ATR here. After we got that news, this tightened up hard. You see the range, and what I'm talking about is down here. So the blue, you can't see it in there. Now you can see the flag, right? That's the average true range of the last 20 minutes. So the last 10 2-minute bars. 23 at 9 a.m. Central. Then these orange bars, this is just the range of the current bar, okay? Complete collapse. We never had time to get the ATR actually up because it's an average, right? So this one didn't sway the average enough. And now we're leveling out, if not fading a little bit in the ATR as the actual range decreases. But I mean, look here, we're getting 15 to 20 point ranges at this time of day. That's very low on the Nasdaq. So we'll see if that increases. What you guys see here, right? These three touch points turned into 4. Really, if you're talking 5 touch points in a row, you're talking up here. But I'm just not a big fan of channels that every single bar have a touch point. I just find they break too often. That's more discretionary, by the way, and here we are getting a break. So I want to let this thing reset. This range was just so tight. That can be a really tough thing to trade here because you end up catching the break typically. And even this upside break, right? If you're trading this with tight stops because volatility is so low, these breaks can just kill you. And at the end of the day, you probably trading a range that tight with that clean bar by bar touch points, right? On support, ascending resistance. I think a lot of times you end up just break even at the end of the day by the time you catch the couple of breaks. So gonna let this range reset here and see if we start getting a trend or if we end up developing a range. Oh, by the way, another thing that you guys might, well, that I'm not sure if I've explained at least well enough in the past, is that sideways, like horizontal moving channels with horizontal supports or horizontal resistance levels, that can form a wedge if one side is ascending or descending, right? But the horizontal side, in my opinion, has a very high probability of not holding up, of breaking. So I don't like to trade rejections off horizontal resistance levels or bounces off of horizontal supports, if I can help it to the best of my ability. I'll trade breakouts on that. Whereas if I'm gonna trade limit order scalping, meaning reversion scalping, on a channel or within a channel, I prefer to buy an ascending support level or sell a descending resistance. Now, if I'm being more aggressive, maybe I'll buy a descending support or sell an ascending resistance. But those two trades are a more aggressive approach. And I usually reserve that for trading either small in funded accounts, small in obviously personal accounts, or evals. Just to try to get through them and pass them. I don't think it makes sense as far as the prop world business model to try to trade. I mean, if you're a beginner, it's definitely good for screen time to take your time in the evals. It costs you less money. But if you're trying to get to the point where you're taking payouts and making money, I think spending 3 weeks in the eval is probably a bad idea. As far as the business model, it's just the trade-off just isn't there. It's too cheap, right? As long as you start, you trade differently, more conservatively once you get to the funded account. So we're getting that curl over here, and now we're testing the upside, see if we can form a range with a descending resistance here. That's what the market's going to do here. Right now it's testing, okay, are we going to form a new channel that's descending, or are we going to break to highs? And that will determine which direction and which style I trade, whether it's limit order entries or stop limit entries. Limit order entries are going to be for reversion. Stop limit entries for continuation. Is Tesla rocketing right now? Yeah, someone said it's up 7%, 8% now. Wait, actually, I want to look at the daily on that. Yeah. I was looking at this at Tesla recently here, around 250. I don't know, man. There's two camps to Tesla. There's the camp of it's time to load the boat, and then there's the other camp where Tesla's always been overvalued. That'll start a fight. 5-minute chart, yeah. You know what I would love to see, honestly, here is a break downside through that 20 and get some continuation through there into less of a no man's land. And then I would want to short the top end of that channel. But if we go higher, listen, I have no problem, but there's no channel here yet, no range. Oh, I have an update, by the way, on the trade copier problem. So I talked to, and I'm going to say who it is now because they made it right. They fixed it. The trade copier that cost me accounts in literally 2 to 3 seconds. You guys remember on Friday, by the way, if you missed it, I had an issue where I was trading 5 funded Apex accounts testing a trade copier for a company. And by the way, I'd been testing this copier for weeks and weeks, if not a month or two. And it was fine, okay? But I was trading 1 micro because I was running a different leader setup. And all of a sudden it triggered, again, 1 micro, it triggered and bought 100. I flattened it, it sold 200 to put me short 100, and I flattened it, and by the time it was all done, I had completely blown 5 funded PAs. The copier was ETP. Okay, I've talked about them in the recent past. Now, a lot of you guys are gonna say, well, I'm never gonna use ETP. Well, this is what happened. I talked directly with Apex about this, who talked directly to Rhythmic and NinjaTrader. They determined that this was a copy trader issue. And they weren't just trying to offload the blame. They actually dug in. They were very concerned. ETP, the developer, reached out to me personally. And he said, we had this happen to 4 other people, including you. I saw that this happened to you. I dug deeper. It did happen. 5 people total this happened to. And they gave everybody that it happened to money to cover what it cost. So he did. He covered the cost of the accounts. And then he explained how they fixed the problem. And I have complete faith, and the developer is very hands-on at ETP, and I'll continue to use them. It was a scary problem, because what I said on Friday was like, whoa, I'm lucky that I was just using a prop account as the leader. I'm just lucky it blew prop accounts, right? Not a person. Because could you guys imagine if somebody was using a 6-figure, 7-figure personal account as the leader, and it buys 1,000 NQ contracts or 10,000 micros? All the money, you would lose the spread. All the money's basically gone, at least most of it, if you lose the spread with that amount of size. And he understood that. He reached out. He said he was very apologetic. He covered it. It was extremely professional. And he then explained to me how they fixed the problem. They've tested it, and it will not happen again. So I've never seen a copy trader with as hands-on of an approach as ETP. They had a problem, they owned that shit, and they fixed it. Okay, so it's not, you know, moving forward, I have absolutely no issue, no fear continuing to use ETP as a copier. But most copy traders, they develop them and then they put them out and they'll update them here and there. But you're never going to hear from the developer. This guy is insane about keeping this thing as good as possible. And he's like there. When I message him, he replies. He's totally on top of it. So I'm back on board with ETP. They fixed it. They fucked up, but they fixed it. Okay. Yeah, the built-in copiers, guys, are, I mean, they're good, right? But it doesn't work for a lot of setups. All right, let's see if we can get this trend curling downside. And then I can take a short scalp off resistance here of this trend. Man, Friday and today, the market's just taking its time to be decisive. Look at that range. 22 at 9 a.m. Here we go. Here we go. Let's see if we can get something moving. Okay, so there's the break of the 20. Look at the 5 here. Heading into the 20. Small factor, but psychological, absolutely, so paying attention. Here's the 2-minute chart. We just broke that. So we're now in that in-between stage where a couple of time frames are not lining up. You're getting conflicting data, okay? So, again, I'm not a big fan of looking at the 1 minute, the 2 minute, the 3 minute, the 5 minute, the 15 minute, the hourly, the daily, the 4 hour, right? The weekly. It'll be paralysis. You'll never end up taking a trade. You'll take one trade every 3 months. But I like to look at 3. Context from the daily, price action from the 2 minute and the 5 minute on futures. So I'm really curious what we end up with here on that 5 minute. Oh, by the way, guys. So the YouTube stream starts every day at 8:15 Central. Okay. I will end it at like 10, after about 2 hours, maybe about 2 hours and 15 minutes every day. Then, starting Friday, I will continue to stream to the tomb until noon Central. Okay? Currently running a pre-sale on that. This is down from what it was. If you guys missed it over the weekend, that's fine. But it's 40% off today only at the tomb. So if you want to get that full stream, it's also ad-free, which is just an added benefit. That's not really the point, though. The point is it's the full stream. Use code BIG, 40% off. And the link is in the chat currently. Okay, we're finally getting this move downside. This is the 5 minute. What it looks like now, we're testing that 20 EMA. This is the deciding factor here. Okay, so what I'm looking at right now is you know, maybe 3-4 minutes ago, I was looking at, see if we develop a range. Now I'm thinking, let's see if we can get a big wide range day with some breakout scalping. Okay, that's what we've seen the past 4 or 5 trading days. And I'm curious to see if we get that. So a bounce here off the 5 minute would be interesting, but it would kind of slow me down. Honestly, I'd like to see a dump off through there and then a test of those intraday lows. If we could get a break, here, let's look at the 2 minute. If we could get a break, that leaves me about, what, 45 points? Kind of looking to keep things a little bit wider here today. I don't like to make an ask of an additional break in a trade unless that's already the idea. Like, for example, a trade that I would definitely take would be a break downside through this low, and then I would hold that and add on the break down through here. Okay, I might take profit off as we push through on the first sell and then leave the second sell on. But you have to be careful if you're going to do something like that, guys, especially if you're trading prop. With a personal account, it's fine. But if you're going to trade prop, you have to be careful because you don't want to end up messing with the rules, like the 30% drawdown, which is a big adjustment to make. I've had to make that adjustment here from just only personal account trading to prop. You don't want to get to a point where you get to your payout and then they deny you because you broke rules. So I think it's best to just make sure you're following them from the get-go. However, that's a great trade that I would take. But you have to be very mindful that you're not going to accidentally crack that 30% drawdown or do something crazy. Or the 5-to-1 risk-reward rule. That's something you want to keep an eye on as well. which can get kind of messy if you're doing multiple ads. You're allowed to dollar cost average with a lot of props. Not all, but a lot. But it can get kind of messy with the 5-to-1 because it really depends on how their data is being displayed to whoever is deciding on your payout. Because if you end up with data that's, not necessarily first in, first out, if they're looking at it a different way, which I don't know how they look at it, it's definitely going to show a break of that rule of the reward to risk. So it might not even be worth, it might just be worth a single entry, a single exit. You kind of have to oversimplify oftentimes with prop, which can make things a little more difficult, but it's always a trade-off, right? There's that big giant reward potential. Oh, and then, with firms like the futures desk, they don't care about that stuff. I made that very clear with them, and they were like, we don't care how you get there, just make money. Aside from the rules that they have implemented, which is cool. So I think that's another reason to decide what prop you want to go with. But again, it takes longer to get funded, which not everyone wants to wait. All right, big old bounce. Look at that 5-minute, man. Look at that bounce. So that slows me down a little bit because we're back in no man's land here. If we can see a break, I'm really just looking for a break, either upside or downside here. And now what I'm really watching is this and this. These are the two deciding factors for me right now. All right, guys, listen, while that works itself out, I'll be back in 2 minutes. All right, don't go anywhere. 2 minutes, count it down. Alright, we're back, baby. And nothing has changed yet. Alright, I'm looking to see if we can get a breakout here up top. And then, that's when we start stop limit scalping. However, looking for continuation, I mean 40-point continuation here, the range is so low. That's crazy. We've seen 3 times this pretty consistently this time of day, which really is interesting. So today's one of those days where it's like maybe we tighten up a little bit, scalp for bigger reward to risk. right, here we go. Looks like we might be starting to clean up a little bit. You know what? I'm going to hold off on placing that until we get a little bit closer test. I want more information here. These bull bars are really losing steam. So if we get just a tap, I'm not too interested, but I want to see if we can get a little bit of stronger movement up there and close near the high of the bull bar, and then I'll buy the rollover on a push through. No problem doing that. You know, I'm also not actually against here if we can get a little bit cleaner channel formation using a limit order scalp on the bottom in preparation. Now, is the probability quite as high? No, almost certainly no. However, the reward potential, it goes up, right, compared to a breakout scalp. Just need a little bit better channel development here. Now, what a lot of people might do actually is buy this push here in preparation for the break. However, we've been seeing a lot of wide range days lately, and here's the reality. 80% of breakouts within trading ranges fail. Okay, so I think it really depends on your strategy. How tight are your take profits? If you're looking for, 40 points of take profit, that changes things. That changes the way you should trade versus if you're looking for 8-point take profits. Fear and greed index just came in, 27 out of 100. That indicates fear. All right, here we go. Man, it's just so weak. It's so weak heading into that resistance. But again, horizontal resistance levels to me don't mean a lot. They oftentimes do break. Probability-wise, the probability of a snap-up is higher. Get a downside push, though. I would take a limit order entry as prep for a potential break here. See that? You get a push and an immediate rejection here. What I really want is a pushback downside, a limit order entry, and then what I can kind of do is tighten up my stop a little bit for a lower probability, higher reward to risk trade. I'd be absolutely happy to put that guy on. What are you guys doing so far? Are you limit order scalping, reversions, or are you breakout scalping? Or maybe some of you put a trade on at 8:30 to the long side and you're holding that baby. Reversion scalping, yeah, no trades so far. Small scalp off an EMA bounce. Yeah, listen, EMA bounces, I'm a fan of them if they align with a pre-existing channel. I've gotten burned way too many times just trading off the EMA. I don't do it anymore. But, you know, there was definitely a phase where, you know, I would sit and try to trade like blue chips around EMAs. And if you guys are currently trying to do that, I would say take it from me, stop wasting your time. It's really, really hard to get edge just based off of an EMA on blue chips. There has to be something else. It was death by 1,000 paper cuts and a lot of wasted time. But I learned a lot, so I wouldn't say I wasted my time, but you cannot waste your time by taking the knowledge that I had to learn the hard way. You need more things to line up. Be patient, let the good setup or let the market bring a good setup to you. If it brings you 10 in an hour, take them. If it brings you 1 all day, take it. Let the chips land as they may and move on to the next. All right, we're hanging up a little bit at this previous high, but I'm not too worried about that. We're just getting a lot of dojis. I really want to see a downside push. And then I'd take a little position here, position myself for a breakout into new highs if we can see it. But I need a downside push first. Need some sellers to step in. Not too much. See, these pushes into the highs are very, very weak. We're talking like a couple of points. Okay, so remember we talked about earlier in the stream, we had that tight channel. We're getting kind of a repeat of that. Now, I'm okay with it in this scenario, but I can't just trade the middle of the channel. There's nothing there. I really want to get a pullback. Enter on a limit order, buy the bid. Let it sit. All right, let's see what we can get. Man, this is deja vu from this morning. You guys remember? Right here, this bar. This range is so tight. 16 points on a 2-minute bar. Goodness. That ATR, so that's the average range of the last 10 2-minute bars, which, you know, we now have an accurate representation of because we're into the day. 21. That's very low. Very, very low. It would not surprise me at all, guys, to see some kind of big breakout bar, which is definitely something to consider. If you're trading without a stop, which, you know, I think there's a time and place, especially in a personal account, there's a time and place if you're disciplined, but I would not be doing that right now. A big bar here would not surprise me at all. Yeah, man, that 21, that's crazy. This is oftentimes what you'll see at, you know, 1 p.m. This range is tight. Usually you have at least double that right now. What What I really want to do, what I'm tempted to do, is get long here, but this is very reminiscent of this morning. We're seeing wicks, weakening bull bars. You guys see this? Closing near the high, slightly off the high, more off the high, smaller bar, bigger doji with a wick. Now a lower high, a little bit of red, seller stepping in, bulls stepping out potentially a little. So I would love to take a limit order scalp to the long side off the bottom of this channel for a push up through the high through 2350. But when you see this bottom of the range start flattening out, it's really common to see a break downside through that horizontal support level. Would not surprise me at all if we see a break downside through. But it's not enough to take a trade. A lot of people would take that trade. There's not enough. Not to mention you have that 20 kind of right in the way. If we look at the 5 minute, that was the 2 minute you were just looking at. If we look at the 5 minute, a break downside through there would put an entry at maybe 23.31. So I would need, oh goodness. That gives you maybe 10, 12 points of room before a test here on the 5. Let's see if we can get a breakout upside and kind of end this slop. Get a return to an ascending support level. When volatility, by the way, is down like this, I'm more hesitant to take stop limit entries because volatility is down, right? So when you're buying high, like a breakout, really what you're doing is you're buying high, trying to sell higher. But when the ATR is 20 at 9:30 in the morning, Central Time, you're buying high, you're asking for the market to make an outsized move compared to what it's been making in the last 20 minutes. Right, that's a tall order, I don't know. So when volatility is a little lower, I prefer to limit order scalp, meaning buying the bottom of the channel, not the top breakout. Gives you more room to hit take profit, allows you to risk a little bit less, but probability goes down, which is always the trade-off. My question is here, you look at Tesla, it's up 10% here. How's Nvidia doing? Yeah, 2.25. There you go. There's that little test of the break, but volatility's so down that it's kind of a lame break. You have these wicks, you're gonna get some stop orders here. I'm a big fan of hunting stops, but I prefer volatility to be up a little bit. I mean, we have a 20, 19, it's dipped. It's dipped below 20. Average true range now. I'm a big fan of stop loss hunting. For example, like taking a short on the breakout down through here, but you need a higher volatility environment because, you get, I mean, goodness, you get a 3-point move and it reverts. I'm absolutely considering a short, just not yet. The information is scarce. And we're sideways. Little sideways channels are really tough. Really what we need here, we need a breakout. I really don't care which direction. Just give me some kind of breakout here and we can do something. We can make something happen. Man, this range being so tight is... This is frustrating. When the range is below 20 this time of day. Here we go. Let's see if we get a breakout. That's the 20 EMA on the 2 minute. 5 minutes a little lower. As far as news, actually we added something here now. We have a Trump and Elon cabinet meeting here at 10 o'clock, so that's 28 minutes out. See that? New attempt at highs. We move a couple of points and the sellers step in. Yeah, right now this is calling absolutely for limit order scalping within a range, which means we need a range. And this, someone might call that a flag, but it's not a kind of range that I want to take scalps in. But that can change in a few minutes, so keep watching. Well, listen, if you guys want to beef up the accounts and not trade the PA accounts in this chop right now, Apex extended the sale, 80% off, single day pass, use code BIG. The link there is, you can just click the link in the pinned comment in the chat. That won't be 80% off forever. They typically end up ending that at some point here. It'll probably be in the near future. Makes the business model it makes the business model, I think, a lot easier to make work when you get these things on sale. All right, here we go. Here we go. Need a little bit of a move. Testing the 20 on the 2-minute. Still gap on the 5-minute. Now again, that 20 is not end-all be-all at all, but it's a psychological factor that gets respected. On the 5-minute, arguably more than the 2-minute, for sure. More people are watching it, just a self-fulfilling prophecy, like all TA. There's no magic here, it's just people making decisions. But I don't like to take trades when one says one thing and one says the other. When one says breakdown and one says support. Well, there's a big bounce. You know, we're now kind of getting to that point, guys. This starts getting really interesting because someone could argue, you know, we're coming into a potential third touch. And by the way, when you draw trend lines, just here's kind of my rule of thumb. Here's how I think about it. I prefer to have this here, overextending, rather than drawing it, you know, like this. Okay, I'd much rather have an overextension than a near miss, if that makes sense. Because for me, when I think about, well, how would most people draw this? Just draw it like you think most people would draw it. It means nothing if other people in algorithms don't see it, right? That's kind of the idea. Again, there's nothing magic. It's just a self-fulfilling prophecy. Each push getting a little bit weaker. The breakouts are weak too. So when you get weak breakouts like this, guys, when we test highs, you know, you get these high tests of day, couple point breakouts. I mean, unless you see a change, you can't limit order. I'm sorry, you can't stop entry order scalp that. You can't breakout scalp that. You end up just getting chopped up. So you need to either see a whole bunch of bull bars closing near its high and that ATR start to creep up by quite a bit. Currently, we're below 20 on the range per bar. Otherwise, it's a really tall order to ask the market to do that for you. So in this scenario, it doesn't mean I just don't trade, but limit order scalps. A lot more attractive, but to take limit order scalps, I need a range. Yeah, as far as level 2, like bookmap, when I trade momentum stocks, all I watch is level 2. I watch the chart maybe 25% of the time, and I watch the level 2 window 75% of the time, if not more. That's how the information hits me best, rather than a chart representation. But with futures, there is so much liquidity, and the liquidity is rather predictable, and you see it around round numbers, mostly. So I just watch the chart and the level 1. Yeah, there's a lot of spoofing everywhere, but futures as well. I don't like to overcomplicate if I can help it. And with futures, I think you could argue that it's a lot of overcomplicating. When you start adding a bunch of level 2 liquidity zones, all this stuff, your chart ends up looking like it's your first day trading with a million indicators. Keep it clean. Just watch the price action. Watch the bars. Watch the visual representation of what people are doing. It'll, I think, serve you best. The 20 for me is just context. The range is real. It's what's going on, right? It's the volatility. So you look at this test here, and it's just not a clean test. It's not a clean test. The upside movement isn't strong enough, okay? So you want at least a little wind at your back. I try to think of it this way, guys. Every time you're looking at every tick on the chart, the probability of up versus down to your target versus your stop is going to be somewhere between 40% on the extreme and 60%. Probability of a trade working out, assuming a 1-to-1 reward to risk. Obviously that changes if you change the reward to risk, but the idea remains the same. Most of the time, it's going to be somewhere between 49 and 51. That test was probably about 51, 52%. I'm looking for at least like 55. And there's no way to know this. The only way to understand this is screen time. And then you make your best estimate, and your setups typically end up repeating themselves. Okay, and then you take when you think the probability is, 54, 55, 56 plus in your favor. You let the chips fall, you take it whenever it comes. Some days you'll take 1-2 trades, other days you'll take 15, 20 if you're a scalper. Man, Friday and today, this range though is killing us as far as quantity. That's okay, this is the job. All right, we got some Trump headlines here. Tariff talk. Mostly Venezuela, though. I don't know if we're going to see a ton of volatility there. And we have the Trump and Elon cabinet meeting coming up here in about 18 minutes. It'll probably be a little bit late, so I'm not too worried about that. As far as volatility, it's not going to be extreme. I would love to see a big aggressive breakout upside. Break us out of this chop. Eric, news and calendar. There's a bunch of places to get it. Honestly, Twitter is not bad if you want news for free. Financial Juice is great. Otherwise, if you want to get crazy with it, you can get a Bloomberg terminal. Those run, I think the rate currently is crazy. It's like, I think it's 20, what was it? I think it's $2,400 a month for one. And then if you get more, it goes down. But it goes up like every year. I don't think it's necessary, honestly, for trading futures, because trading news, I think most traders don't do too much of. So yeah, that's not gonna, I don't think that's gonna be worthwhile for you. But Financial Juice is great. I've used Financial Juice for years. As like a casual source. Let's get a breakout. This descending channel, I don't trust this thing at all. We're way too horizontal as far as this resistance, and horizontal resistance levels tend to break. And we also have that 3-tick bottom up here. This range here, we're definitely going to see stops below there. So actually, I would not be totally against a stop limit sell in this region here. Looking to take out some stops below here, push it through here, here, and here. However, the target, you know, if I want to run a 40-point target, you're asking for a really, really big push. All right, we've got Trump and Elon coming out, the cabinet meeting, 15 minutes. Again, I don't think volatility there is going to be too crazy. I'm not worried about it. I hope it's crazy, because this is ridiculous. We're getting very, very low ranges. All right, here we go. Here we go. Let's get a push up through. Again, breakout scalps, guys. We are sitting at 2350. Adds a little bit of an argument, but I mean, listen, look at the ATR, right? You end up taking stop limit entries. By the time you get to a fill, you're already pushing the average true range on that bar, which people watch. And by the way, they don't even have to have the indicator. They're just watching visually. With those, with the size of the bars. So we got to see a breakout there. We're going to get one. We're going to get a breakout in either direction, and then we can start taking some trades here with this garbage chop. You know, something that I don't know if I've talked too much about, but this is something to think about, guys. Those of you guys who trade futures, or really any like indice-based instrument, ETFs, options on ETFs. If the market is in the backside of a collapsing kind of range, or we're inside of a range, right? We've already made a lot of what I guess people would probably call price discovery in this region, right? So think about it here. There's not a lot of wind in either direction. The Bulls don't have a lot of wind at their back. The Bears don't really have a lot of wind at their back. Arguably, right now, you could say the Bulls more than the Bears, but it's just a couple percent, just based on the previous trend of the day. It's not enough to take a trade off of. But when you're in a scenario like this, think about it, right? What's the volume coming from right now? Probably a lot of funds and institutions and algorithms making buys and sells for plans that are, 3 weeks off, 6 months off. They don't care about today. So, I mean, where are you going to get the edge to push in your direction if there's not a lot of traders participating at this very exact moment in time? That changes as soon as you start getting breakouts. When you're inside of a little range like this, trading directionally, especially near the center of that range, is a really great way to chop yourself up, death by 1,000 paper cuts. All right, here we go, testing the highs. Now, normally, on a day where the range is a little wider, like this number here, right now it's 18, that blue flag, I would go ahead and place a stop limit buy just above that high. But in order to get a fill, you're already testing the ATR. Okay, so today I'm thinking limit order scalps, at least for the morning, while volatility is low like this, then we'll see what we can get. Which means I need a range to form, a channel, and then I need to test the downside or the upside, depending on ascending or descending. I really don't care either way. But since 2020, maybe 2021-ish, the market, I mean, yes, we had the big bear market in 2022, which was not fun. But for trading, I know a lot of you guys have started in the last 4 or 5 years. Like, you've been kind of spoiled as far as volatility. Okay, like you look back before 2020, guys, it wasn't really the same. And there's nothing worse, I'll tell you right now, as a trader than a sideways market. When you get this kind of garbage every single day, it's very hard to find setups. But I think with increasing market participants, markets like that are going to happen less and less often, which is good for us. Okay, we got Trump and Elon coming out in about 9 minutes here for that cabinet meeting. But again, I think volatility will kind of not be crazy with those comments. Here we go. Finally getting a bit of a breakout here. See if we can get this range expanding. A little bit better on this last bar here. Again, that blue here. That blue, that's the average of the last 10 bars, and the orange is the range of each bar. If we can see this cracking back above 20, 25, above 30, that would be beautiful. And it looks like we may be moving in that direction, which is good for us. Go ahead and update this. See, it's kind of starting to line up with that 20 here on the 2-minute. If we look over to the 5-minute, it draws it on both charts, right? The 20 is a little below there. It's a very aggressive upside trend line, but I'm definitely watching it. Videos on ATR. I have a lot of videos where I use ATR. I suppose I can make one just on ATR. It's pretty simple though. It's a pretty simple concept. It wouldn't be too long of a video. But there's a lot to talk about if you really want to get nuanced with ATR as far as like trading stocks and stuff also. But for futures, there are different kinds of average true range, right? There's on the day, you can look at the average true range of like the last 2 or 3 weeks of trading. You can look at the ATR of the last, 10 2-minute bars. Those are going to obviously look very different and give you much different information. But ATR to me is, I don't really think of it as an indicator. I just think of it as what the market's doing volatility-wise right now, and I prefer to use those kind of indications versus just some lagging indicator. I think price action reading is king, and always will be, at least on futures. All right, come on, market, give me something. Let's go. Guys, that pre-sale is still going for the tomb. 40% off today only. Use code BIG. You can either grab the Gold Pass, which currently includes the audio squawk and the pre-sale for the extended full-length ad-free stream. YouTube ends after about 2 hours. That one will go for longer, almost close to 4 hours every single day for at least futures members of the tomb, but also Gold Pass members, of course. And that starts Friday. So the pre-sale is right now, 40% off today only, and that link is in the chat. Hope to see you guys over there. When that starts Friday, it'll be a good time. But of course, still live here on YouTube every day, starting at 8:15 Central until 10:30 a.m. Central, about. And then move over to the tomb until at least noon Central, depending on the market conditions. Okay, here we now we're getting a little bit of a pullback. Absolutely considering some limit order scalps here on the pullback. And honestly, when I say scalp, I'm kind of thinking a longer average duration trade just to avoid some chop. Volatility's down, yes, but it's choppy. So what I'm really thinking here, guys, is if we can get a controlled move downside, not like a dump off, a controlled move downside here to 2340-ish, maybe a dip through 40. Absolutely looking for a limit order entry to the long side. That trade, my expectation is that that trade would definitely sit on for a little while longer than like your typical scalp, but that's more due to market conditions right now, just the range being tight. But that would be a good trade for me, regardless of outcome. Need that break at 23.40. Hey, did you hear about that discovery under the pyramids? I know, is this a setup? I don't know if I should fall for this. So you guys see we get this flat top. Those have a high probability, in my experience, just discretionary, of breaking. Okay, now, with today's ATR, it's likely not going to be aggressive, unless we get some kind of news headline. Unexpected, by the way. But that's kind of what I'm after here, if I can get a downside push to around that 340 with a limit order entry on the bid. Myself ready here for an entry. Again, unless we see some big dump off, then I hold off. Which, by the way, a lot of people might be considering, well, why don't you just put a limit order out to buy? I think it's a bad idea, because sometimes you get unexpected news, and sometimes being a little bit slow to the trigger is a good thing, because if you get unexpected news that dumps the market, I don't want the limit order to get filled. I want to be able to make a human decision to hold off, because I don't know what just happened. Right, whereas if you just put a limit order out and forget about it, if you're using really wide stops, fine. With a bigger idea, fine, but sometimes you get that news that just kills you, stops you out instantly. Come on, give me a push. 23.39. Oh, this volatility. The ATR is 15. Oh, goodness. At 10 a.m. That is brutal. Really waiting for a push to 23.39. For a limit order entry on the bid. Again, I'm not going to put an order out just in case we get unexpected news. There we are. Put that in there, see if we can get a fill. Again, I only leave that for about 15 seconds because of that news issue you can get. Hold that, let's see if we can get a retest. You guys can see these EMA tests actually cleaning up a little bit as volatility comes in as we get deeper into the day. You're getting these wicks on these bear bars. So you have, yeah, a couple of consecutive bear bars, but the buyers are certainly stepping in. That doesn't make it a 90% probability, right? But I'm looking for higher reward anyway, because I'm buying the bottom of an uptrend rather than the breakout. That's why we don't use limit orders. That's why we don't use limit orders, guys. You get a fill there. That can be brutal. And when I mean limit orders, I mean like I prefer to use manual. That's why I don't let them sit out. You get a fill there, the entire setup has now changed. You get a dump off like that because we're getting news coming through. Now, you're also getting, you know, Trump and Elon are going to have their cabinet meeting here now. We'll start getting headlines from them. But that right there is why when I'm limit order scalping, I don't just set an order out and forget it. Because I'm not running 150 point stops and 150 point take profits where I can afford to take that hit if we get a news piece. I prefer to enter manually rather than letting it fill me on that, where now this entire setup just adjusted. Okay, and now I'm looking actually if we can get a downside push here, which I would love to see. Then all of a sudden the setup changes. They found giant cylindric columns going down to the bedrock, standing on top of giant cubes that are hollow. There's a lot we don't know. I think the sooner people accept that, the better. Hey, G-Strong, you watch the attitude, buddy. This is the price discovery channel. Yes, it's very low volatility right now. It is frustratingly low volatility. That ATR that says 15.92, oftentimes on a normal day, that'll say 45 right now. That's crazy. You see this sideways chop, man. So, as far as volatility, like ATR wise, this is a nuanced answer to, again, kind of a question that I think implies the answer is simple, which it's not. The range compared to the ATR compared to the average of like the certain time of day on any given day. That's why I have this comparison. So the ATR, the blue, right, is the average true range of the last 10 2-minute bars. Whereas the orange is the range of the current bar. That tells me something of the current bar. Okay. Now in the morning, like not long after the open, a range of like 80 to 100 is high. Right now, a range of 15 at 10 o'clock Central Time is very, very low. Right now, anywhere between, I'd say like 25 and 45, I would call more like normal. But if you're seeing, 70 ATR at 1 p.m., that's very high. And it trends down, the average is gonna trend down throughout the day, and then usually come back up in the last like 45 minutes. So it's contextual, right? Okay, here we are getting some more breakouts. What I would love to see here, let's go all. What I would love to see here is a push higher to bring in some more volatility, and then a pullback to create a new channel, a new bottom of the range, and then I would buy the bottom of that range with a limit order for a push back upside. Again, the volatility is so low right now, it's so frustratingly low that stop limit entries the probabilities are it's not going to go that far. So I don't enter in low volatility with stop limits if I can help it. No, these are points, not ticks. Okay, there we go. Getting that push. Want to get a push upside, bring in some buyers, get a bit of a pullback down to a clear area of ascending support. Hit it with a limit order on the bid. That's what I would love to see happen right now. Again, these breakouts are weak. They're just small. And think about it, right? If you enter with a breakout with a 5-point take profit, what are you going to risk? I mean, you're going to risk 40 points. That reward to risk is getting a little bit nuts. It's just a math question for reward to risk, by the way. The worse, quote unquote, your reward to risk gets, the higher the probability of the trade, just naturally. But to keep it reasonable for prop, you know, within that 5-to-1, buying breakouts like this it's tough because you risk a reasonable amount compared to the reward you plan to get, maybe 5 to 10 points, and you end up just getting chopped out, which is obviously a big issue. All right, develop a channel here, and then give me a limit order entry. Okay, so we should be getting at least a couple of headlines out of the Trump and Elon meeting coming through soon. Two minutes. Don't go anywhere. All right, here we go. Now we're getting something. What do you guys think? I'm getting a little bit of movement here, I say, as the ATR dips below 15. Man, that's crazy. Crazy, crazy low. Looking for that limit order entry. down in this region here. Well, no new headlines here. But again, expect some probably from the Trump and Elon meeting. But don't expect, you know, a million points of volatility. There, let's make an adjustment. Just draw it as obvious as you can as far as like, okay, if you took 1,000 people, right, and you had them all draw a trend line on this bar, or on this chart, I mean, what would they draw? That's the way that I think about it. All just self-fulfilling prophecy. But I do want to buy that bottom. So as far as price, yeah, controlled move down to 50. Yeah, mid 50s-ish. See this horizontal? It's very common. There you go. There's the break of that horizontal. Looking for closer to low 50s at this point. Unless we see a pickup in volatility, it's likely to be a longer duration trade. I know that heading in, which is fine. We're only up about 2% on the day. And you put a trade on with a 20-point take profit, it takes all day. Just a couple headlines out of Canada. No call with Trump yet. Trump and Elon should be talking here pretty much right now. Cabinet meeting. That's about it right now as far as news. We need some kind of savior as far as volatility, though. This market is dead. This is wild. Still looking for that limit order trade down near the bottom here of this range. Really the only push as far as liquidity and volume, or I guess liquidity and volatility, I should say, that we're getting right now is breaks into intraday highs. I mean, you look at these two bars, that's really all we're getting. I mean, this one here, we had a little algo pop to the downside. I was going to take that trade until we got that little pop. But if I can get an entry down here, at least if we see a break into new highs once more, we can get a little bit more volatility, pushing me a little bit more in the money compared to the risk. That's about it though right now as far as ideas, trade ideas, at least for me. But guys, with this volatility, I'm sorry, the ATR dipping below 14 at this time of day, I don't expect this to continue to fall, the ATR that is, all day. Okay, you know, I highly doubt we're going to see a 4 ATR by closing time. So I expect that we are going to see some kind of saving grace bar, some kind of breakout, and then that's going to increase the volume, bring in some more volatility. That's what we need, really. Hey, Biscuit, what's up, brother? You get this horizontal movement. It's just ugly. We're getting a lot of that here today. You get an attempt at a fallout and a pushback upside. Horizontal, attempt at a fallout, pushback upside. I use Rhythmic for Apex. For Take Profit Trader, it is Tradeovate. It's the Tradeovate connection through Ninja Trader. I like Tradeovate. I don't have a problem with it at all. But I think Rhythmic is kind of notoriously like the, I don't know, maybe more professional connection. But honestly, I've had less actual issues with Tradeovate, though it does seem to be a little slower, Tradeovate. So it's kind of a trade-off. Honestly, I don't think it matters. Pick whatever one you like. Which, by the way, Apex is 80% off and single day pass. So it's a good time for the business plan to get in there and get some accounts. Come on, market, give us a breakout. I do not care which way. Just give me something to do here. Well, that's an attempt. Now remember, not everyone's going to have that trend line drawn the same, but everybody sees it mentally, even if they haven't drawn it. Even if it's just subconsciously. Everyone sees it. But everyone's going to have it drawn a little differently. Some people might have it drawn more like this, right? I mean, it's a range. I'm going to leave it like that because I think that's probably how most people have that thought about, or at least drawn, from earlier in the day until we see a more definitive break. Which I hope we get, because we need some volatility here. Not uncommon, by the way, to see this retest. You see a break, you see a retest of the range. This trend line does not exist the exact way on everyone's chart, but it will within a range. So you oftentimes will see a break downside, a retest, and then it's a question of do we go higher or reject hard? If we reject hard, which I kind of hope is the case, then we can see a move downside and I can start stop hunting these wicks, which is what I really want to do. Which would also bring in more volatility, which I think all of us need right now. Now you guys see this horizontal resistance, right? We also have a horizontal support lining up with the 20. Now what some people might say is they might say, okay, well, we have a horizontal both. Those kind of cancel each other out as far as probabilities. We're right dead smack in the middle. Overarching bull trend, point for the bulls. And we have the 20 lining up, point for the bulls. It's one way to look at it. That does swing the probabilities a little bit that way, in my opinion. Not a lot, a few percent maybe. But what did we just talk about, right? Those horizontal channels with a horizontal resistance, horizontal support. It's so hard to make the decision because horizontal levels snap up so easily. They are not nearly as strong, in my experience, as ascending or descending, an ascending support or a descending resistance. Those require more of a switch. Whereas here, everyone's just waiting for one of these to snap, and then there's going to be a lot of stop outs and a lot of stop entries in that region. I really want to see one of these break. Make a decision here so I can start doing something. Look at that range. Now below 13 at 10:25 in the morning. That's very, very low. We should get a bump if we see a break or once we see a break out of this horizontal channel, which again, horizontal channels are I think, a recipe for paper cuts. But we should see a slight bump in range once we see a break. Again, I do not care which direction. Yeah, the volatility index is going to be low here. IV crush is probably killing people with options today. Seller's making a lot of money, though. All right, let's get a downside break through here. Snap up this horizontal channel, which is just garbage. And let's give us something to do. What I would really love to see is, you know, that some people are going to draw this trend line more like this. Okay, so I would love to see a close, and then stop hunt here, stop hunt here, stop hunt here. That's what I'm looking to do. Right now, I'm going to leave that drawn kind of like that, unless it calls for a change. There we go. There we go. You guys see that horizontal channel snapping up nice and easy? Now it's a matter of, can we actually form a reasonable short-term trend? Yeah, see the trend lines, everyone's going to draw them differently. You have to think about it in a range. It's not literal. It's always a range. And the more obvious it is, the tighter that range. The less obvious, I think the more room you have to give it. The more forgiving you have to be with your entries. Or, I mean, more so your stops. There we go. There's a little volatility pump. I say as we hit 15 on the range, which is very low. That's very, very low. Now you are going to get more people also drawing a trend line like this. Here, this is the 5 minute. You're going to get people drawing this. Something you have to consider, which is why I want to see a close and then a rollover and another close. A lot of factors here always. I want to see some breaks. This is a big range, so if you want to look at the range like this, you know, where you have this area, it's a big range, and a lot of times what I like to do is in a big range like that, I don't like to just buy for a bounce or sell for a rejection, because you end up with too big. How do I explain this? When you have a lot of ways you can draw a trend line, you end up with a range of like 50 points, which is a lot to risk for the potential profit in a lower volatility environment. So I like to wait for confirmation when the range is big, whereas as the range tightens up, I will buy on an ascending support after the third touch point, you know, fourth, fifth touch point. But the more that widens out, the more room you kind of have to give these things, which is a little frustrating when the range is like this in a very low volatility day. Battling around that 20 on the 2 minute. Down near 23.40 on the 5. All right, let's get a push down through 23.50, down toward 23.40 region, with a couple of consecutive bear bars closing near the low. That's a look I want to see. However, with the 40, you know, you have to look at the 5, right? The 20 EMA on the 5 is just about the most relevant EMA. I'm not big on EMAs, but if we're going to say, okay, what's probably the most heavily watched EMA outside of like a daily chart, right? I would probably say, well, for day traders, probably the 20 on the 5. A lot of people use that. So if we can get down through 20, I'd say 335, 2330. Then we're in stop hunting territory for wicks a little lower, which is great. So guys, starting on Friday, right now again is the pre-sale. Right at this time, I'd be heading into the tomb to stream for another minimum of hour and a half to them. The pre-sale is because it hasn't started yet. It starts on Friday. It's 40% off if you use code BIG at the link in the chat that's going out right now. Click that. You can either select the futures membership or the gold pass. Use code BIG and you get locked in forever at 40% off. And that's not going to be something that happens. So at least not regularly. So hope to see you guys in there. Still live on YouTube every day, 8:15 for at least minimum of 2 hours. But I want to see if we can get a downside test of that 20 on the 5 minute, get through there and get at least a trade going here. No headlines from Trump and Elon yet. The cabinet meeting that started at 10 o'clock. It's now 10:32 Central. What I'm really watching here now, though, is if we can get, because now it's a question, are we going to end up seeing a wider range respected like we're seeing on the 5 minute, or we get a bounce and a push up through the highs, which I hope would increase volatility, right? Or if we get a downside break, which I would actually prefer, we can clearly break that range for basically everyone looking at the chart, which is good, because then you start pouring in a lot of sellers start stepping in, a lot of buyers start pulling back and getting nervous, and then you have stops, right? I mean, that could be a big move on a not so volatile day. It looks like a big move, but in all reality, that's really only 75 points. Way to the bottom of that 2-minute chart on the top right of your screen. So, something I've been thinking about is those, Apex, man. They have those 250 and 300,000 accounts for like $33 for the eval right now. And the lifetime PA fee is 85, which is, if you look at the 50K, the monthly is 85. The lifetime is 125. But the 250 and the 300, they're harder to pass, right? But if you can get through the evals, which is, I think on the 300, it's a $20,000 a profit target with a $7,500 trailing drawdown, which is obviously more difficult to pass than the 50K, 3,025. But I think where people run into problems is they get the 25Ks, the 50Ks, because they're easy to pass, and then they trade a full mini, or 2 minis, or 3 minis. It's too big. At least for the way I trade, it's just too big. Yeah, that PA pricing on the 250 and 300, that ends, I believe, March 31st. That's when they said it ends, though. Sometimes they extend things, and I wouldn't know if they're going to extend. But as of right now, that ends on the 31st. But 80% off, that's why that's happening, plus single day pass, so you can pass in a single day across all the accounts if you use code BIG. Here we go, getting to move upside. Well, let's see if we end up getting a push upside and maintaining this range. If we do end up pushing upside through here, through the highs, couple of scenarios. If we see volatility remain low here, that ATR down there, it's at 12 right now, 1250. If we see that stay below about 20, I'll be looking for limit order entries down near the low end of the range. Okay, buying on the bid. Unless we see a curl over and then I have to sell at the offer on a downside move. But I don't trade breakouts when volatility is this low. If volatility increases, then I will start trading breakouts with stop limit entries. But if we see a curl downside and we end up not respecting this range and breaking downside through here, then I start using stop limits, probably with limit order entries in preparation of the stop limits as an add, right, to try to stop hunt these regions. You could argue here, though I think that's still part of the range. Here, stop hunt. Here, stop hunt. It's kind of the game plan. Well, listen, guys, I hope volatility picks up. I will see you all back here tomorrow morning, 8:15 sharp Central Time, every single day. Have a good day.